Cheers to another trading day, retail traders. This is Mastro here with your routine briefing, and we're dressing up again. So it's a really big day on that front. You can, if you're listening on Twitter, because it's a double big day, because I'm also trying to stream this on Twitter and Twitch at the same time. So maybe we might get to a whole 4 members of the audience this time. We'll see. I know it's asking for a lot. Not really expecting anything too crazy, but that's what we got going on. And it was another beautiful day in the market as well. So just excitement all around. So to start off, today's top edge levels are 61.22, 61.46, and 61.62. And what I'm going to do, thanks to one of the 2 or 3 listeners who actually gave me feedback, I'm going to, instead of just giving the DEVISE clearance, we're going to real quick, I'm going to overview what I discussed in the newsletter to give the assumption as well, and then we'll jump right into the DEVISE clearance. I definitely want to keep these videos a little shorter. So real quick, what's in the newsletter today? Well, it's a whole lot of the same, yet at the same time, a little bit of bullishness to characterize the current market conditions. So since we closed above 61.22, I personally put on my first little bit of long delta. We closed above 61.46 yesterday and again today. And so yesterday I put on the additional contract. And then if we close above 61.62, then I'm going to start seeing that as we're breaking out, and I'll add the other. So let me just bullet points here. So yeah, initial position at 61.22, added with the close above 61.46. I will add again with the close above 61.62. I will have my beta weighted delta, which is already pretty low. I think it's at about 300-ish. My max is 3,000 if things are really hitting the fan, as they say, make it a little higher than that. So definitely still low, but I'll have what I got going on here if we close above 61.22, and I will completely neutralize everything if we close below 60.72. So the premium conditions are not great. That's why I'm staying small. Obviously, volatility is super low. At any point, we can definitely fall out of bed here. Yet, keep the levels in mind. We'll collect a lot of premium until then. I've already collected almost $2,000 since putting on the initial position. So that's looking good. So looking toward the end of the week here, I'm hoping tomorrow is going to be my personal last trading day. I do not want to be involved with OPEX. OPEX is one of my nemesis, with nemesi. I'm not really sure what the correct pronunciation of that would be, but yeah. So I'm trying to definitely be finished tomorrow. 1 second, sip of the wine. If you're listening on Twitter, I see there's nobody, but in case there's a ghost listening who's invisible, if you hear me sipping stuff, the old routine briefings, we drink a little wine, and so for the new and improved ones, we're also going to drink a little bit of wine. I digress. So yeah, so if you're not a subscriber to the newsletter, by the way, retailtraining.com, it's free. I think it's pretty darn high quality. I have all my credentials in there, I guess you could say, my proof that I'm actually a profitable trader, unlike pretty much every single other person on Twitter. So yeah, check that out. It's free. It always will be free. I'm never going to charge for it. But if you want like the written version in the higher depth details, retailtraining.com, check that out. So yeah, investor sentiment still at that bearish high. We The next reading comes out tomorrow. Came out either today or comes out tomorrow. So we'll see what happened there. But we've been at, despite the price kind of drifting higher, Sisyphus, if you've read the newsletter, the Sisyphus market that we have this year has definitely been moving higher a little bit. We have not seen that belief on the sentiment side of things. So I know there's various sentiment indicators. I linked the one that I trust, the official sentiment survey, will say in the newsletter there. So despite the fact that NASDAQ is usually the worst month in post-presidential election years, you still have that low sentiment and you do not have price confirming. So I mentioned in the newsletter today, the early part of this week tends to have bullish seasonality and the latter part tends to have bearish seasonality. So we'll see if that follows through on that end. And we're about to jump to the DEVISE clearance. I just, again, want to make sure my assumption is clear here. I'm going through the newsletter real quick. Yeah, I think that pretty much covers it. So let us jump into today's DEVISE clearance. I will real quick at the end just review everything. So this is my chart you're seeing. This is my lambda chart, I call it. The guy I learned a lot of TPO stuff from had something to do with lambda as a some type of edge tool. I don't remember what it is, but that's the name of the chart. So that's what we've had up there. All these levels are in that how to devise an entry document, which is in my folder. I link it all the time here. You'll see where all these levels come from. I do not just pull them out of the blue and I tell you exactly how I get them. Unlike a certain other individual on Twitter whose name rhymes with Madam Ancini, who says it's proprietary. This stuff is not that complicated, so to call it proprietary, and also at the same time not have any type of live trade log or proof of your entries. Yeah, that's a little suspect. Again, digressing, let's talk about the devise entry from today. So I did the bullish devise clearance today comes from about 10 a.m. and I only need this chart. So we're just going to look at the center chart here, and I will try not to move my cursor too much because I've also heard that that can be a little distracting. So we're going to focus on this area, and I'm going to point to things. I'll do some limited pointing just to make sure that that cursor is not too distracting and or annoying. So devise clearance, that is, I guess I would define my edge. It is a 6-part confluence of factors that has a very high win rate. So I'm not going to quantify that exactly, but it's pretty high. I win most days. I'm still actually, despite doing this for 7 years full time, I still get very grumpy when I have losing days. So that's just, if that's any indication, win rates, it's probably like 4 out of 5 days, something like that. I hate to say 80% win rate because there's a lot of losses in between, but overall, if you abide by that devise clearance and you place your trades accordingly, it tends to have positive expectancy. And there's been thousands of trades at this point, so I can say that with a period and not a question mark. So I'm going to take one more sip of wine and try not to be too philosophical here. So what does DEVISE stand for? DEVISE stands for divergence, exhaustion, volume, initiation, sponge, and excess. And we're going to break them down one by one. So what's going on here for this particular entry? Again, this is today, February 19th, starting at about 10 a.m. I say starting at about 10 a.m. because DEVISE is a process. It is not a moment in time. And if you watch me trade and you look at my trade log, you'll see I like to scale in, scale out of positions. And it's just based upon a behavior, not so much a signal. So to call something a signal, I wouldn't say it's a pet peeve of mine, but I'm definitely do my best not to use that word. That is a dirty word in going back to philosophy and my trading philosophy. And so I call it devise clearance just to make sure to emphasize that it is not a signal. So let's get to the meat and potatoes of things here. Starting with the divergence. Today's divergence was the cumulative volume delta, CVD, diverged relative to 9:45 a.m. EST. So I'm just going to use my cursor for a minute here. That is the low of the day in CVD, cumulative volume delta. Google that if you want to know what it means. It is in. I have various links in both the newsletter and in my how to devise an entry document. So if you don't know what that is, just check that out. I don't want to um, explain it. It's much easier if you see what I'm talking about there. But it is a good divergence tool. So I don't like to use it to trade. I'll never be like, oh, CVD is diverging, for example. CVD is going lower, so that means I'm going to get a short trade, or CVD is going higher, means I'm going to get a long trade. I do not do that. I only look at it as one component of devise for the divergence component. Anyways, this is the reference point here at about 9:45 a.m. Eastern. All times are Eastern. By the way, I'm not going to say that every time, so all times are Eastern. 5704, that's the low of day. Yet when price made its low of day at about, we'll say between 10 and 10:15, these candles are making that low. You can see that the CVD itself is making a higher low. So price making a lower low, CVD higher low, divergence. I do prefer the hidden divergence, which would be in this case when CVD makes a lower low as price makes a higher low, yet regular divergence still qualifies. So that's the D component. You got that D. Going to the E, which is exhaustion. If you're looking again within the circle, especially toward the low there, aggressive selling occurred as price retested the prior week close at about 61.32. That's where that 61.32 level is. And a burst of delta. Got to use the cursor again, sorry. These blocks here, horizontal blocks here, red, the darker red they are, the more aggressive the selling. That is the burst of delta. Disrupted absorption. It disrupted absorption at the low, which was the overnight low, by the way, and yet failed to follow through. So instead, the sellers faced a strong rebid, which they then lacked the volume to beat, to overcome. And so that's the E. You're seeing the sellers come in with strength. Often there's if the A plus exhaustion would be if there's also a burst of volume, but burst of delta works, and we have our exhaustion. Sorry, I noticed a typo. Just give me a second here. Okay. So we got the D, divergence, E, exhaustion, V, volume. What's going on here? You can see this better on the DOM, but you could definitely see it on this chart. You can really see it on a candlestick chart, but it's best seen on a DOM. So what is a DOM? Let's show you that real quick since that'd probably be helpful. It means depth of the market. It's a price ladder. It's another term for it. This is the one I have. Hop into a live stream if you ever want it explained. Reach out to me if you want my chart book. I'll obviously give anyone my chart book who asks for it. But I'm looking at the DOM for this, so that's the best spot to see it. And what's going on at this point in time is you're seeing the buyers lifting every offer and booing price above the low. So what does lifting the offer means? It means that a seller comes in with the ask, buyer grabs the ask, reaches up to grab the ask, no problem, and he keeps doing that. They keep doing that. Obviously, there's more than one buyer, and that's what that looks like. You have to look at the DOM or any price ladder to see this. Um, but if you look at it long enough, you'll definitely be able to see it. And again, you don't see it as cleanly on a price chart like a candlestick chart, but if you have a short-term candlestick chart, you can see that in the body of the candle going on as well. Again, superior way to do it is a DOM. I would not qualify the candlestick chart as the V component just because this has been developed using the DOM. So that's what's going on there. That's volume. And then the delta gradient, which again, you saw we talked about during the exhaustion component here. You saw that aggressive delta gradient come in. You saw the widening candles first with the delta in, and then you see it again here with the delta out, especially when you get that perfect entry there at about, or excuse me, that confirmation for the final entry at about 10:30, and then the 4-bar fractal, which comes before. So the 4-bar fractal comes at about 10:15. Um, and that's confirming that potential reversal. So, like I mentioned earlier, I do like to skill into these positions. So I would say 4 contracts would be like my starter position. I'll get up to 6 or 8, and then if I'm really feeling crazy, up to 12. But usually it's between 4 and 8. And the way that I'm adding these, just as a side note here, is as we move into the level and I start to see that potential exhaustion, I add the first one. As soon as we retreat from the level by about 0.25 N, which in this current volatility environment is 2 to 3 points, I'll add the second. When we get to 0.5 N, or almost always this also has a 4-bar fractal, I will add the third tranche, and then the fourth comes when you start to see that momentum. That's when it gets that final add. So that's what we're seeing with volume. So just to review what that 4-bar fractal signal is. So this is the most important part of that volume component is you have the close of the current bar. So count 1, 2, 3, 4 using the cursor again. So we have 1, 2, 3, 4, or this one, sorry, 1, 2, 3, 4. Okay, excuse me. Okay, so the close of bar 1 right here. Remember, 1, 2, 3, 4. All right, putting cursor away. The close of current bar 1 must be higher than the high of the previous bar 2. The close of bar 1 must be higher than the high of 3 bars back, bar 4. See, those conditions are met, and we have that buy signal. That is a 4-bar fractal. So that we have divergence D, exhaustion E, volume V, initiation I. Initiation is the easiest one. I mentioned it as I was discussing my entry there. Price reclaims that level, in this case 61.32 by 2 to 3 points. Starts to show some strong momentum, which is that delta gradient can be interpreted by that delta gradient going the other way, and then it makes that higher low. So in this case, here's the low, makes a higher low. So you have the fractal. You can wait. I got in, or I will get in when this closes. But if you want to wait for that higher low, that's fine too. And that's happened at about 10:25. today. So the most important part of initiation is simply price reclaiming the level, in this case 6132 by 0.25N. That's on the MGI sheet that I always link to, by the way. I update that every day, and we'll see how many more times my voice cracks. Strong momentum, bonus points if it's making a higher low with whatever chart you're looking at. Oftentimes, if I'm adding, let's say I'm feeling more confident about position, I will also add an additional contract when it confirms that higher low. So I initiation. S for sponge. So sponge is exactly what it sounds like, and it's just absorption. So strong absorption occurs at around 6132. That area is an area of high liquidity and volume. It has been for several days now, and this case suggested a bullish sponge because it's at a key demand level. So despite the high concentration of seller delta that we've been talking about, which is implying aggression from the other side, buyers reinforced the bid. Again, they stepped up to lift every offer, and that reinforcement creates that sponge look. So you see this going on combined with the lack of volume, which mentioned earlier, and together that suggested. Oh, my ad block just updated. Second, sorry about that. Yeah, this combined suggests that. So we have to review since the ad block interrupted us. The absorption's going on. You have that seller aggression being met by buyers reinforcing the bid, lifting the offers. Combined with that lower volume, you're not seeing a fall through in volume to disrupt the absorption that's going on. That's suggesting that price is lacking further downside. And then you're also seeing that tight cluster of candles. So that's the S, that's the sponge component. And then finally, excess. Excess is the easiest. All it is a wick. And bonus points, like we had in this case, I'm going to ellipse within an ellipse here. Right there, that's wick I'm looking at when I say that a long delta heavy wick confirms that potential excess. So that is DEVISE. Again, it's written up in the newsletter, which every day I'll write it up in the newsletter. If you are more of a visual person, that's what's going on there. The more you look at it, the more you identify it, the more comfortable you be with it. So DEVISE stands for, again, divergence, exhaustion, volume initiation, sponge, and excess. And that is what we got going on here. So just to review one last time, I have my initial position from 61.22 and the add following yesterday's close above 61.46. I'll add again with a close above 61.62, and I will have my delta if price closes below 61.22. Things get really crazy, I will neutralize it completely with a close below 60 72. So 672, that's that big magnet level, and a close below there, we may start to see some extended downside. That's what I got for you today. If you find any of this information helpful, please give this post a like to help with the algorithm. I also appreciate any engagement in the replies where I'll post any relevant links. So come hang out in the live stream trading floor tomorrow if you're around. Love to have you. And regardless, I thank you for your attention. I encourage you to stay classy until tomorrow.